Hello, good afternoon and welcome to today's webinar on changing the game, how to create a truly competitive business. My name is Stephen Edwards. I chair Area 6 for CIMA, which is the northwest of England and North Wales. These series of webinars and our other events are put together by a small team of volunteers. And if you're interested in getting involved with that, in the chat, we will put an email address so that you can send us your details if you've perhaps got other topics, venues, or speakers to recommend, or perhaps ideas of a company we might wish to visit, or as a factory visit or something. It's my delight to introduce Arend Welmers, Managing Partner at 90 Days. But just before I hand over to Arend, a couple of housekeeping notes. To minimize disruption, you've all been muted so we don't get any sounds feeding in. If you've got any questions, we'll have a Q&A session at the end, and you'll see in the panel there's a box there for questions. Just put your question in there and we'll pick through them at the end. And following this webinar, you'll be sent a link to a recording of it so you can re-watch it, and also a survey link for feedback. So it's my pleasure now to hand over to Arend. Thank you.
Thanks very much, Stephen, and thank you very much to all of you for the invitation to address you this afternoon. So as Stephen said, I'm Arend Welmers, and I'm the founder and co-managing partner of 90 Days Limited. And 90 Days helps organizations accelerate their business performance by driving change from within. Now, I've had the pleasure and privilege of working with many different businesses in many parts of the world over the last 30 years and helping in each case to improve the business performance, predominantly through pulling levers of strategy, leadership, and culture. And so over those 30 years, I've learned many things, and I'd certainly like to share some of that learning with you this afternoon. Now, the general rule of any presentation is not to insult your audience, and I'm going to ask for forgiveness in advance, as certainly my intention today is certainly to challenge some of the things you may have held to be true about how your organizations can compete, and perhaps also to inspire you to consider changing how you do business in your own organization. And so today I'm going to talk a little bit about the problem with strategy. I'm going to ask you to imagine you've won the lottery. I'm going to ask you to tell you the story of an incredibly successful company, and I'm going to explain to you why they're so successful by inviting you to play tennis with me. So let's get started. Now, my observation over the last 30 years, and it's really the topic of our discussion this afternoon, is that most businesses simply participate rather than compete in the marketplaces that they serve. So how do you change the game and create a truly competitive organization? Well, typically, most people think it's about the leadership team's ability to choose the right strategy. So I'd like to examine this concept a little bit more closely this afternoon. Now, a Kaplan and Norton study published by Harvard Business Review suggests that something like 85% of the executive leadership teams spend less than 1 hour per month discussing their unit strategy, and within that, 50% of those actually spend no time at all. Now, the research suggests, and certainly my own experience confirms, that most companies do not have a clearly developed strategy. And even if there is a written strategy, the chances are considerable that it was the half a dozen or so senior management team members who developed that strategy. And where that is so, our experience certainly is that in most cases, the strategy will not have been fully communicated to the rest of the business. So I'm kind of wondering how that's stacking up with your own experience at the moment. But even in the cases where the leadership team have done a reasonably decent job of communicating that strategy to all employees, it's more than likely, in my experience, that the majority of those employees were not involved in the strategic thinking process. And so consequently, they don't understand fully or appreciate why the particular strategic choices are necessary. And here's the rub. While strategy is most often conceived centrally in organizations, it's also most often executed at the periphery of the business. And the consequence of this, of course, is that something like 56% of strategy initiatives or strategic initiatives are successful. And the implication of this is that the value then that was intended to be created through that strategic plan, of course, is never properly realized. And according to an article in The Economist that I read recently, something like 61% of executives acknowledge that their firms often struggle to bridge the gap between strategy formulation and execution. So the article that I read goes on to say that, or to ask really, if it's really possible then to actually have those kind of superior insights. If you think about the average leadership team in pretty much most organizations, is it really possible that they would like to have these superior insights in a world where, of course, information is so open and the world is moving so fast? So those kind of insights that would really truly enable you to compete through a strategic decision. Now, in my view, in my experience, actually, and the same with the authors, they also suggest that actually it's not really the ability to actually have that insight that no one actually has, but more importantly, that these organizations were able to set themselves apart by being able to actually execute the strategy, whatever strategic choices or responses that they've selected, to be able to execute those as quickly as possible. Now, here's the thing, right? So the general held view is that your ability to execute strategy has a bigger impact on the results of the strategy itself. And I guess the logic of this stands up. So if you think about it, the opportunity to, if I gave you the opportunity to properly execute, fully execute a B-grade strategy, is that likely to be more effective than executing an A-grade strategy poorly? Okay, so if you look at the research and the guys who sort of study this sort of stuff, there's certainly, and I'm guessing right now, you're probably thinking, I'd rather have a B-grade strategy executed better than actually an A-grade strategy executed poorly. So the problem, of course, is compounded by the fact that many organizations dedicate time just every few years to focus on the strategic planning, and as I've said, with mixed results when it comes to implementing long-term goals. Now, perhaps your organization has a strategic plan, but can everyone in your organization find it? Can they, and would they actually know, if I walked into the business right now, would they be able to tell me what the main strategic goals are and the objectives that are part of that plan? And by the way, if you're sitting there thinking, well, they probably can't, you're certainly not alone. Furthermore, because employees are often not part of the planning process, as I've suggested earlier, and those plans are not infused into the everyday business, few employees are able to tie in those business objectives and growth goals to their daily work. Now, when we run strategy or exercises for organizations, we certainly try, where possible, to get the entire organization in the room, if not a significant part of it. And I've run strategy sessions with organizations where we've had hundreds of people talking about and thinking about the strategic choices that the organization may have, not necessarily because the leadership team weren't capable of making those or coming to those insights or conclusions, but actually much more importantly because it's really all about their ability to execute. And if they haven't understood why is it that the organization needs to make these choices, then their ability to execute is going to be impaired. Now, for those organizations that create strategic plans, a great deal of effort, of course, is spent to create a document that is, in my experience, very rarely referenced and, of course, much less actively used to manage the business. And, of course, our experience is also that most managers easily become too overwhelmed with the day-to-day firefighting to keep their eyes on the broader vision. So very, very quickly, organizations, even if they have the intention to be strategically focused, really actually land up being very, very operationally focused most of the time. Now, reflect on your own business for a moment. Is there a clearly developed strategy? And of course, the second most important question, how good are you really at executing your strategic plan? But here, the problem gets worse, right? So if you're just relying on strategy to compete, the fact is that the majority of businesses represented by all of you here today are in industries that are already largely converged. In other words, there's very little variance in the business models of similar companies, the technology that those companies, or even the service quality and the products that they actually sell or provide. And since all organizations compete by securing advantageous positions and resources, strategic positioning is more likely to yield advantages for those of you in this audience that are actually in emerging industries than those that are in converged industries. But irrespective of whether you are in a converged or emerging industry sector, in reality, in my experience, most businesses will have very, very few strategic options. Let's think about it for a minute. Most businesses don't have any more access to finance, to equipment, location, materials, technology, or people than any of their competitors. So really competing under these conditions is difficult. So how do you build a truly competitive company? Because for most of you here today, it's not going to be because of your ability to choose a better strategy. Well, I'd like to begin by asking you to imagine for a moment that you've all just won the lottery, and it's a large, large sum of money. And I'm going to just pause there for a minute so you can enjoy that idea for a moment. And I want you to accept that you're all too young to retire. So here you have to decide now how you're going to use your lottery winnings to buy a business. And at this stage, you've narrowed your options down to 2 possible acquisitions. Now, these 2 businesses, Company A, as you can see, and Company B, are identical in every way apart from one thing. In Company A, everyone comes to work every day thinking, feeling, and acting as an employee. Okay, what you might understand or express as an employee mentality or mindset. And in Company B, everyone comes to work thinking, feeling, and acting as if they are a business owner. They don't necessarily have to be an owner of the business, but they come to work every day with that mentality, that mindset. So here's my question. Which of these 2 businesses are you going to invest your hard-earned lottery winnings in? Now, I've asked this company to hundreds, if not thousands of people just like you over the last 20 years. And each time I get pretty much the same answer. Now, we're not going to run a poll today. I want to keep this pretty simple. But I want you to make a note of your choice and also perhaps think about just briefly why you chose the company that you did. Now, every time I've asked this company, pretty much the overwhelming response is that the majority of people would prefer to buy Company B. Interestingly enough, usually when there's a little bit of disagreement in the room and somebody puts up their hand and says they prefer to buy Company A, it's usually because they are in finance. They're usually the finance director. But when I asked them why they would buy Company A as opposed to agreeing with the majority that Company B would be a better purchase, it's usually really for the same reasons, that fundamentally they think they think Company A is going to be inferior, and therefore they can actually buy Company A for cheaper and probably make it to look like Company B. But for now, I'm going to just assume, because we don't know what your responses are, that actually the majority of you would agree that Company B would be the better company to invest in. But when we ask you why, most people would say that Company B is more likely to be profitable, more likely to grow faster, more likely to be more innovative, probably would have a lower staff churn, and of course also be more sustainable as a business. And so, we could tease this out much further, but generally that's what people would say. So if I'm accepting, because I can't see you and I'm not hearing your response, but if I'm accepting that, so far the majority of you are actually kind of in Company B, going to invest your money in Company B, here's my second question. Which of these 2 companies would you rather work in? So in Company A, everybody comes to work every day. These are all good people, by the way. So they come, they come to work, they do try, but in Company A, they come to work with this kind of employee mentality. In Company B, they come to work with an owner mentality. Now, when I ask this question, again, I get predominantly the same answer, Company B. And then when I ask why, I get the answer that the expectation is that the employees who have an ownership mentality are more likely to work harder and smarter. They're more likely to hold themselves accountable for the results. They're more dedicated to the success of the company. They're more likely to be engaged. And over the time, their levels of financial and business literacy are much, much higher. So here's the thing, okay? I'm going to take a punt and guess that only a few, if any of you, of the several hundred people on this webinar, have actually read any of the research done on companies who work in this way. Now, if I'm correct, I have to conclude that your preference to both buy and or work in company B must be based on your gut feel, your instinct that this is a better company to work to be involved with. And interestingly, you're right. The empirical evidence itself is really very clear. Businesses run in this way grow faster, are generally more profitable, are much more resilient with their performance more stable over successive business cycles, and have consistently outperformed the market even during the downturn. They are also more robust and consequently have a lower risk of failure, and they also have measurably higher levels of staff engagement and job satisfaction. So let me ask you, if your instinct is that both company B is better to invest in and also a better company to work for, then, and all the empirical evidence, by the way, supports this argument, why is it that most companies are run like company A? Now, let me tell you a story, and this is the story of an incredibly competitive business that works in this way. The story begins actually in the recession of the 1980s, when a company called SRC was a division of International Officer, then one of the largest companies in the world. And we know they were a large company because for the previous 2 years, they had been laying off something like 1,000 employees every week. And Springfield's, SRC's in Springfield, their Missouri factory with 119 employees was next on the chopping block, with a very realistic possibility that they would soon have no jobs. A guy called Jack Stack, who was the manager of the plant at the time, had been sent by International Harvester in Chicago down to Missouri to see what he could do with this business. And so Jack and about 10 of the other employees decided that they would try and save the company by buying it. And so they managed to scrape together about $100,000 from about 10 of them together. And they made a pitch to to International Officer, and who agreed if they could get the money together, then they could buy the company. Now, Jack took their business plan, and by the way, these guys had never produced a business plan before. These were operational managers, and they were not financial people. And they took their request for a loan to over 50 financial institutions, until finally Jack found a bank on the West Coast that granted them the loan. And the final deal is still the worst loan in corporate American history, an $8.9 million loan against $100,000 in equity. Now, normally when I tell people this in the presentations, the majority of the audiences I normally speak to are not financially literate. They're not finance people. You guys are. So you'll understand the implications of this loan deal. Most people don't appreciate, they don't really understand what this actually means. But you guys will appreciate that under these circumstances, the bank was demanding weekly forecasts from the company, because and a single misstep, just a simple missed loan payment, would pretty much they were going to close the company down. Now, many of you will know that it's really hard to keep a business going for a long time, even in good economic times. And most businesses fail within their first year, while a mere 25% of businesses make it past their 5th birthday. And even big name companies aren't immune, right? So the average lifespan of the largest publicly traded companies is just something like 14 years, according to a study of Standard & Poor's 500 index and reported on by a report that I read from McKinsey's. So that's why SRC's 40th anniversary this year is such a big deal. Few companies can boast a track record of shifting from surviving to thriving quite like SRC can. And even fewer companies have been profitable for 39 years in a row. So here's the headline. Since 1983, SRC's stock price has increased by over 1,000,000%. And again, because you're finance people, you'll understand that that's really very good. But let me show you just how good it is. So just imagine that in 1983, you were part of that management team, and you'd had $1,000 to invest in a business. And you had chosen instead to put that money into an S&P 500 index fund. Your earnings now today would have been something in the region of $53,000. Better yet, if you'd used that money to buy stock in Berkshire Hathaway, Warren Buffett's company, you would have had generate something in excess of $500,000. But if you put the same amount of money in SRC, you'd now be sitting on an investment worth $10.8 million. So why am I telling you this? Well, on the journey, Jack learned the language of business and realized that it wasn't difficult to understand. After all, the numbers of an organization simply tell a story, right? Now, most people, and most people in the businesses that you're part of are scared of numbers. They don't understand it. They think it's about maths, and they're generally intimidated by them, right? But that the numbers just tell a story, and if you can understand the numbers, you can understand the story of the organization. But with an 89-to-1 debt to equity ratio and an interest rate at the time of 18%, he needed everybody to understand that meeting their loan payment was critical to their success. And he also needed them to understand that exactly what it was that they needed to do to reach that goal, and of course to make sure that they understood that their jobs were at stake if they didn't. And he realized that if he could have everyone working together to build a great company, they would be unstoppable. Now, I could tell you lots of other stories about SRC, but we don't have the time today. So what's really interesting is that not only has SRC generated substantial wealth for its employee owners, the company is 100% employee owned, and that's an important fact that I'll explain a bit later. But such is their commitment to their employees that the company has also never laid a single employee off over its 40 years. Okay, a period that you'll appreciate spans 4 recessions and the pandemic. And in fact, the company absorbed a $15 million hit to its earnings in 2020 to ensure that everyone retained their job. Now, I know this company really well. I've studied them. I know the people there. I know Jack personally. And for a long time, I spent a long time learning about how they ran their business. And I credit SRC's ability to create and preserve jobs over the long run to 2 key strategies. First of all, diversification. So you'll need to appreciate that SRC has started and spun off more than 60 separate businesses over the last 40 years. And it's doing that very, very deliberately. By the way, not all of those businesses were successful. Okay. And the second thing that I put it down to is its ability to create this culture of ownership. Okay, which is built on embracing practices like financial transparency, for example, business literacy education, scorecards in the organization where everybody can actually see the performance of the business, making the performance of the business very, very visible. Contingency planning, okay, not expecting that the strategic plan is going to be executed perfectly, that there's always going to be a problem, right? Who could have anticipated the crash, the pandemic, etc., etc. Okay, forecasting, getting everyone an ability to looking forward rather than just simply looking backwards at the historical performance of the business, but rather looking forwards and anticipating actually where the business is going. And of course, also importantly in this particular case, because they're employee owners, sharing the wealth that they all generate through the businesses. Now, these are the foundations for what we in our practice call ownership thinking, a communication and leadership system that teaches everyone to think and act like owners of their business. So what are the key elements of building a business that has employees who come to work every day thinking, feeling, and acting as owners? What are the sort of things that you can do in your business? To illustrate the principles, let me invite you to play tennis. Now, I suspect that on our call today, there are a number of you who probably regularly play tennis. Probably from my experience of asking this question again to lots and lots of people over many years, a larger number of you who are perhaps familiar with the game but don't really play, and the majority of you who really don't know much about tennis at all, other than what you might occasionally see on TV. Now, the chances are that between us, we know enough about tennis to know which end of the racket to hold and how to use a racket to hit a ball, etc. And the chances are too that we know enough that if I invited you to go tennis, and gave you a racket and some balls, we would each go to a different end of the court and probably quite instinctively and quite quickly begin hitting the ball to each other. And after about 10 or 15, probably 5 to 10 minutes of this, quite frankly, one of us is bound to say, let's play a game. Now, but what would it actually take for us to play a game of tennis? Well, if neither of us really knew very much about tennis, the first thing we would need to agree are the rules of the game. And in this sequence, or in this respect, we would need to kind of agree the significance of the lines on the court, for example, the importance of the net, what the sequence of play might look like. And we'd need to agree that before we could even begin to play a game. The second thing, of course, we would need to do is to decide how to keep score. So we would make up a scoring system. It probably wouldn't look anything like the what a typical tennis match is scored, but nonetheless we would create a system that kind of made sense for us. And then thirdly, we would need to agree what winning looks like. In other words, we'd need to agree how many points, if that's what we call them, we would need to accumulate to win the game, and then perhaps a set, and then perhaps a match. And most likely, we would agree what a reward for winning would be. So, for example, you win, I buy you a beer, I win, you buy. And by putting those elements of a game in place, we'd now be able to play a game, whether, of course, or not it actually replicated the tennis as we know it. Now, I'm going to suggest to you that this is what's happening every day in businesses all over the world, and most likely in your business right now. This morning, when your people arrived at work, they opened up their computers, they started up their machines, they set up the next meeting, they got ready to process the next order. And in all of this time, your people are taking decisions on setting up their own rules, assessing their own progress, and deciding whether they're winning or not according to their own set of criteria. And they're all doing this to various degrees, relatively uneducated about how your business actually makes money and what it really needs to focus on to grow profitably, without any real understanding of what the numbers of the business are saying, and without often the authority or ability to make decisions that might actually move the numbers in the right direction. Now, as I say, my objective is never to insult my audience, but I know this to be true. I've been working in organizations for more than 30 years, and in every organization I've ever worked in, certainly that's been the case. So people come to work with absolutely honorable intentions, quite determined to do a good job, but actually what happens next just depends, all right? Now, of course, the reaction when things go wrong by senior management is really often disappointment when they see these decisions that are taken, and their kind of typical responses aren't, they just don't hold themselves accountable, they're not interested in the business, they don't care, etc., etc., etc. Now, if you're not sure that I'm right about this, by the way, when you get off this call this afternoon, go into your office and actually approach a number of your colleagues, maybe make a couple of calls if you work remotely, and ask them actually if they understand how your business makes money. And if so, if they can explain that to you, what's the business model for your particular organization? And then ask them actually if they know what the revenues of the business are and actually what the profits might be. Okay, how much this profit and revenue does a business generate each year? And then ask them if they know what the revenue and profit target is for the financial year. And finally, ask them if they know how they contribute to the company's revenue or profits each year. I'm pretty confident, like I said, based on my own experience of asking this question many, many times in lots of different organizations, that most of your colleagues will not have any idea. Now, I know the significant majority of the people in your organization potentially are financially and business illiterate, as I said. And I know that this is true even if you're from a firm of accountants. Now, of course, I'd expect that a properly trained accountant or finance director to be financially literate. But that's very, very different, and you'll appreciate from understanding how the dynamics of a business works in a continuously changing and challenging marketplace. I've worked with many accounting people, the people from the finance background, through things like, for example, business and financial literacy simulations. And I've consistently found that whilst they most often understand how to capture the results of each trading round, for example, in the accounts, they are not necessarily any more competent in making the correct business decisions than many of the other people from other business disciplines in the organization. Now, this is where you come in. If perhaps you take one thing away from my talk today, let's make it this. Please, please, please take this up with your CEO and insist that everyone in your business is educated as quickly as possible in the basics of how your business makes money and how that trading is accounted for in the basic accounts, the income statement, the balance sheet, the cash flow statement. We don't necessarily need more accountants in the organization. That's not what I'm asking for. But you really do need everyone in your business, at the very least, to understand what the numbers of your business are saying so that they can make better decisions more quickly. Now, you don't need to hire specialist trainers to do this. Of course, you can run short training modules in-house yourself. And if you want to get in touch with me at the end of this presentation, I will be very, very happy to send you free of charge a set of 24 financial and business literacy exercises that we wrote that you can do in less than 15 minutes in each occasion with the people in your organization as part of your, your either your weekly or your monthly kind of briefing. So they'll give you enough to start talking about the finances of your business each week for 6 months, and for 2 years if you do it once a month. Now, it's really essential that you put this education in place, because after all, the language of business is the financial statements. And if your colleagues don't understand the numbers, they really can't fully participate in your business. And I'm sure you've experienced that frustration yourself, wearing your the hats that you do. So my point is that business really is a game, albeit a serious game. And if you think about it, it actually has all the elements of game. There's a playing field, the market. There are other businesses, the competition. We have teams, we have rules, we keep score, and we win or we lose. And ownership thinking is a way of running a company that gets everyone focused on helping the business be successful. Employees' goals and accountabilities are tied directly to the success of the company. It teaches all employees from the top down how your business model works and how your company makes money. And everyone is taught to understand what winning looks like, the goals of the company, and how they can make a difference, both individually and as part of a team. And employees learn actually how they contribute to the financial performance of the company. But it's more than just a promise to share information, because I know that many of you are sitting there now and saying, well, we kind of share information. We tell everybody once a month how the organization is doing. Okay, it's much more than that. It's a business philosophy, and it's a system. It's a business system. It's a way of running your company that unleashes that entrepreneur in every employee, a way to get everyone informed, involved, and engaged, more importantly, in making your company successful and very competitive. Now, at 90 days, our meta model, if you like, is based on the idea that your business is already perfectly designed to produce the results that you're currently seeing. If you think about it, it must be so. But we also know that the results you're seeing is a consequence of your organization's culture. Your culture, in turn, is best described by the behaviors that you see consistently repeated in your organization. So, behavior repeaters is kind of what we see or recognize as culture. And this is the important bit, okay? Those behaviors, the behaviors that you see in your organization, are the product of the system that is your organization. And by system, I mean the collection of policies, practices, processes, the hierarchy of your organization, the reward systems that you've built, and even things like how the business is structured and organized. So if you want to change the results that your organization is producing, if you want to create an organization that is much more competitive, if you want to change the organization in a way that is much more sustainable, then you really need to consider what aspects of the system that is your business are driving the behaviors that you're seeing, that is repeated in your organization, that are producing the results that perhaps you're not looking for. Now, just to give you a very brief illustration of that, of what I mean by that, I had a client many years ago, and they invited me in because they thought that the leadership team, and this was a sales environment, so they were a telephone reselling company, so they would approach sort of small and medium-sized companies, and they would basically sell them packages of minutes that they could use in all sorts of different devices. And what they did is they were experiencing extraordinarily high levels of staff churn. And they invited me in because they thought that the leadership team or the management team needed some management skills or leadership skills. And I looked at it and I thought, well, let me go and have a look. And I had a series of conversations with the people in the business, and I discovered something extraordinary. And I discovered, and I won't go into the details too much, but I discovered that actually the sales managers were incentivized at the beginning of every quarter to hire as many people as they could, because every sale made a difference. Okay, and the difference that it made was actually the difference to the bonus scheme that they enjoyed. And at the end of the quarter, they were incentivized to actually fire all the unproductive people, because the way their sales bonus was calculated was on the amount of sales that they made divided by the number of people that they had in their organization at the end of the quarter. So you can see from that little example, I know it's astonishing, you're probably sitting there shaking your head about how could this not even be obvious to them, but you can see that actually the impact of an incorrect system, in this particular case a reward system, actually how that significantly affected the results how it effectively changed the behavior of the company, the people in the company, how that actually changed the culture in the organization, and of course, ultimately, how that impacted on the results that the business was able to produce. And by the way, this was actually at a cost of millions each year to the organization. So ownership thinking has two critical elements: sharing business information and implementing a business operating system that enables everyone to use that information to improve the performance of the organization. Now, you can't simply share information and expect increased engagement and improved results. You actually have to manage the system actively and persistently. You have to make sure that you train and educate people as to what their information is saying, and actually empower them to be able to make decisions based on what they see. Now, ownership thinking transforms organizations. Take my word for that. And it gives them a significant advantage over organizations that still keep their employees in the dark. And it's not just about generating profits or cash and wealth, but it's also about how do you distribute it better? How do you distribute so that more people can benefit by the wealth that they create? Now, ownership thinking works because employees get a chance to think, feel, and act as business owners, to take responsibility for the business rather than just doing their job. And each employee knows enough about the company to understand how their actions will affect the business results, and understand that they have a stake in those results that are now collectively produced. And if you run your business in this way, then you will develop an edge that will be very, very difficult to compete with. And just in case any of you like the idea of introducing ownership thinking in your organization, but are concerned that with the idea of sharing the profits of the business and perhaps in a different way, just understand something really important, okay? That, and for example, by the way, it might be that your organization, perhaps you're a public sector organization, so, sharing in equity in a public organization is just a non-starter. But let me tell you from my experience that you can and will still see significant improvements in the performance of your business if you just do the first three things. Educate people about your business, then empower them to act on what the numbers are telling them that needs to be done, and ensure that they understand what winning looks like in your business. And it seems for the majority of employees, whilst most money, more money still helps, of course, and is often appreciated, feeling valued and included, and then enabled and trusted to make a meaningful contribution to the business is much more important than being paid more money. And of course, that's assuming that you're paying reasonable wages in the first place. So I'd like to leave you with this thought. What if you could get every employee in your business to come to work every day thinking and feeling and acting as if they own the business? How much more competitive would your organization be? Thank you for listening. I'm not sure how long we've taken to do that, but I'd be very happy to take any questions now. Stephen, over to you.
Thanks very much. We've got a few questions coming in. Through this, in terms of getting everyone in the business to act like owners, are you suggesting that all the employees should be given equity?
So this is a really interesting question, and perhaps some of you will know that there's lots and lots of different ways now, and certainly over recent years, maybe even the last decade or so, successive governments have actually been trying to encourage employee ownership in many respects by changing legislation, introducing legislation that kind of makes it easier and tax efficient for example, owners of businesses to enable other people to participate in the equity of the organization. So there are some cases, there are lots of different structures that these things take place, ownership trusts, for example, and it may be that from my experience, actually, the ownership trust model, for example, is quite popular, but usually there's an element of kind of mixed, where equity is held by certain people in a business more directly and through ownership trusts in other respects. I'm not always sure that giving equity is a good thing. I much prefer the idea of actually how can you construct that people can earn the equity in the business. So so there's some benefit for the owners of the business, for example, in a privately held organization. But it's certainly it depends on the business that you have, and also if you're a very small business, for example, setting up these kind of schemes can be quite expensive, and so it might not be able to easily be done. And of course, there's also the tax considerations with giving away equity, certainly to individuals. So the trust mechanisms can be more efficient ways of doing it, but you really need to consult an expert if you're considering those sort of angles. I'm very happy to talk to people more directly about it when we have more time. It'll depend on the circumstances, of course.
Yeah, and another sort of variation on that is the partnership model, isn't it? Where and John Lewis is an obvious example of that, where all the employees are partners, but
yeah,
hasn't been doing so well recently. Any thoughts on that? And
yeah, John Lewis is probably the most often quoted company when it comes to talking about or held up as as an exemplar of what ownership looks like, shared ownership looks like. Of course, the partners in John Lewis are they're not really owners of the business, in the sense that that business can never be sold. The partners in the business in John Lewis terms will never ever benefit directly from the sale of the business. It's held in perpetuity by the trust, and really what it is to certainly there's historically there was plenty of evidence to suggest that your experience of shopping, for example, at John Lewis was significantly better in many cases than at many of the sort of its competitor sort of high street retailers, simply because the people felt more part of the organization. Let's be very clear. Employee ownership itself is not a panacea to creating entirely successful organizations. Every organization, including those that are employee-owned, are subject to the conditions of the economy, and retailing is pretty difficult in space to be in, particularly with most or significant amount of trading being done online. So every retailer, including John Lewis, is going to have to deal with the market. However, it's also true, and I know this because I was sort of paying attention to John Lewis for some time, that for many years, when other retailers weren't actually increasing salaries or weren't actually being able to paying bonuses, certainly John Lewis were. In some cases, some years those bonuses were meaningful. So it's again a little bit of both. It's not a guarantee that your organization won't suffer from the economic trading conditions.
Okay, and just thinking about public sector, local government organisations, have you had any experience or any thoughts of applying the sort of ownership concept to those sorts of organisations?
Yeah, absolutely. So in public sector, there's a lot of these organizations you might know them as community interest companies, for example, and there will be other variations of this. I was quite keen, and I'm not sure, but I'm hoping my point was made towards the end of the presentation, that actually this isn't. I don't want you to think, or the audience to think, that this is really all about ownership, about owning equity in a business. Actually, in my experience, as I say, if you work just running your business like this, any organization in this way, is fundamentally better than running it in a kind of conventional way. People really, the thing that's most important, people want to be involved. They want to be part of the story. They want to feel that their contribution is important. And when you actually when you build the conditions where people are able and enabled to actually contribute to the business, that's what they get up for each morning. Okay, they don't get up because they might get a slight increase in salary or maybe even a bonus that year. I don't know anybody who works harder each year because they're going to get a bonus. People who work hard just work hard. They work hard because they engage in the business. They work hard because they feel part of the story. And those are the things that we need to really be working on and building on and introducing. So it's quite an important point, Stephen, that I want you all to understand that if you can actually bring people into your business, if you share the information, the financial information of the business, the performance information of the business, and you ask them to think about and say, what is that telling us? And then enabling them to kind of make decisions based on that, because you know that they understand those numbers, and now you're enabling them to actually act on them. You will see significant uplifts in engagement in your organization, just because people feel part of the story. It's a really, really important distinction. If you can then also find a way of rewarding them, and it's not impossible to reward people for these businesses for the performance of the organization. Obviously, in public sector companies, there's no profit to be talked of, but that doesn't mean we certainly can't reward people in different ways. But that really is, in my experience, the least important of the 4 key things that you have to do.
Yeah, it's aligning everyone's thoughts, isn't it, with what their intentions with what the shareholders are trying to achieve. Is getting that in the same line, and in the public sector, it's thinking what the customers need.
So sorry, Sue. Yeah, the principle that we kind of apply in our practice is what we call high involvement. Okay, so we want to get everyone in the business involved in the conversation of the business. And what I mean by that is that, for example, when we, as I alluded to in the talk, when we run strategy sessions, right? Conventionally, strategy sessions are, the top half dozen people in the organization take themselves away for 2 or 3 days, and then maybe another 2 or 3 days, and they kind of, work out what it is that they want to do, and then they hope everybody gets it right. Now you can shift ground just there. If you bring everybody in, as we always do, we bring, the entire organization, if possible, into a room. And I appreciate some organizations you have to think a little bit more creatively about how you do that, because they are really large, and you might not have a room big enough. But if you can bring people in and you can get them part of the conversation, the important thing is that actually it's the thinking about what where our organization is and what we might need to do to compete more effectively. That's important, because once they do the thinking, they start to understand why the choices that follow have been made. Okay, why the decisions have been taken, and because they know that, then they don't have any problems in supporting the actions that are required, even if they don't necessarily, even if they're not necessarily to their advantage. And I had an example of this with a client of mine. They had made, this is a long time ago, this is 20 years ago now, they'd made fundamental changes, root and branch changes to their organization, technology, restructured the entire organization, introduced new products and new services. And they spent 6 months, the leadership team had spent 6 months working on that. And then they brought it in to the organization. They arranged briefing meetings. They put stuff in people's pay packets explaining the changes and all the rest of it. And 6 months later, they invited me to come and talk to them. I still remember meeting them at 5 o'clock in the afternoon, and I sat around the table with them, and I said, so, what's the problem? And they said, we spent 6 months planning this thing meticulously. We communicated the changes to everybody. We did this, we did that, we did that. But Arend, they still don't get it. And I thought about it for a while, and I said, I think I know why. And they said, why? And I said, well, actually, it's because they weren't involved. And they said, well, what do you propose what we should do about it? And I said, well, how about we actually bring them all into, there was a relatively small organization, about 60 people. So how about we get them all into a room, and we asked them, we posed to them the same problems that you'd considered 6 months ago. And we asked them to think through what does the organization need to do to solve these problems. And so after a couple of seconds, one of the directors actually asked me, said, "Arend, okay, that sounds like a really interesting idea and a little bit different, perhaps, to how we approached it before." He said, "But what would happen if somebody came up with an idea we hadn't thought about?" And I said to him, "Well, that would be a good thing, right? But in my experience, that's highly unlikely. The chances are, you guys are the serious, the experienced people in the organization. You've been here a long time. You know a bunch of information that probably most people don't know. Anyway, the chances are that actually you've thought this thing pretty well through, and I suspect that they'll come up with pretty much exactly the same answers that you've come up with." So we went and did it, and that was exactly the outcome. We got all the people in the room. We asked them the fundamental questions. We kind of worked through the process, And guess what? They came up and they saw exactly the same problems, by the way, as the senior leadership team, who probably at that point thought that we were the only ones who understood what was really going on. And they found, they came up with exactly the same solutions that the senior leadership team had. But this time, nobody needed to explain it to them. And literally from that moment onwards, there was no pushback on any of the strategy again. It was quite an extraordinary thing. I learned a hell of a lot from that intervention, I can tell you.
Yeah, I've seen that happen in a public sector organisation where initially you think, well, surely this is the role for the directors to do, but actually getting everyone involved in that early stage and discussing it through, you do then get the ownership.
Yeah.
And everyone can then work through
that. See, people are extraordinary in my experience, and I've seen this many times. Right, I've been working with people, with organisations for a long time now. And another example is an example of a publisher. Again, I won't talk about the particular example, but a publisher in London, and they were publishing their flagship product, which is very, very well known. You'd know the product. But they were publishing their product for 65 years, updating it twice a year. And their major customers said to them at some point, a couple of months before I met them, that that wasn't good enough anymore. They wanted them to be publishing, updating this publication monthly, and they didn't quite know. The leadership team couldn't quite agree on how to get this done. So you get in some consultants, right? And they interviewed four different consulting organizations, and they hired us on the premise that actually, our contention was that we would get everyone in the room, the entire organization, 108 people, we put them in a room for 4 days, and we would ask them to reimagine and reinvent their organization, to deliver that product, not once a month, but continuously at half the cost. So we kind of set a challenge for them, a business challenge. We took created what we call an opportunity statement and articulated a challenge. And then, the very first day, we got all these people in the room. So you can imagine they've never worked like this before. 108 people working together just in the first instance, trying to understand what the issues really were. In the second and third day, they set about reimagining and reinventing their organization. They identified initially 8 key areas that needed to change, and as a consequence of that, they narrowed it down to 7. And I got them to prepare a 1-page business case for the change and a 1-page project plan for how they would execute it if they could get the management team to agree. And then on the final day, which was the Monday, we had the management team sitting in the middle of the room, the rest of the organization sitting all around them, and they pitched case after case after case. All of those 7 cases were signed off by the leadership team, and then we set them off to execute over the balance of the 86 days. By the end of the 86 days, they were able to produce that publication continuously at half the cost. We put £2 million on their bottom line in 90 days. Right? So people are extraordinary, but the key to that is actually getting them involved. They really want to help. Okay, I know for a fact that nobody gets up in the morning and says, right, let me see if I can make some really crappy decisions today that are going to affect the business badly, cost the company a whole bunch of money. But somehow that happens, okay? And the reason for that is, as I said earlier, is because they either are not getting, they don't get the information that they need. In other words, the management team keep it to themselves, or if they're given the information, they're not educated to understand what that information means. Okay, and if you put those 2 conditions in place, you pretty much get what you see to be the average organization today. Lots of people coming to work if they're not really sure actually whether they're doing the right thing. Their focus, if you like, their thinking is very, very functional. So they go, well, I'm in finance, so I do finance stuff. I'm in HR, I do HR stuff. I'm in marketing, I do marketing stuff. And nobody realizes that actually that's only half the job. The other job is actually how do we all get together and make this company an incredible company that's very, very profitable and is growing fast.
That's great. Yeah. Well, thank you very much. That's been a really thought-provoking webinar, and one of those things where in days to come you'll think back over things. So thank you for everyone who's joined us during this. You'll soon get a link to a feedback survey and in due course a link to a recording of this so you can review it again. So just remains me to say, Arend, thank you very much. Thank you for taking the time today to speak to us all, and to everyone else, enjoy the rest of your day. Thank you.
Thanks very much, Stephen, and please reach out if I can help in any way. If you want them to have, if you have any more questions, just please contact me, call me, or email me, and I'll be very happy to answer your questions. And Stephen, thanks very much to you and the organisation for hosting us this afternoon.
Okay, thank you.
Thank you. Bye-bye.